726 is what we're seeing for the rand. We've got manufacturing data set to be released today. That's, of course, for the July period. For June, we saw an increase of 8.8%. The PMI number was released last week. We saw a slight uptick. We're above that 50 level, which shows growth at 50.3. What do you expect for today's manufacturing figure?
Morning, Eleni. Well, the manufacturing figures that are due out today are in fact for July. And in July, we saw that the PMI was still below the key 50 level. It has ticked up in August, but that is clearly not going to be evident in the numbers that are due for release today. Standard Bank expects that manufacturing production will have moderated in July to 6% year-on-year from 8% year-on-year in June. And we ascribe that mostly to rand strength in the month.
Well, 726 is what we're seeing for the rand, as I mentioned. We saw it hit 715 on Friday. That was a 2.5-year high against the dollar. So a lot of volatility. We had the South African Reserve Bank releasing reserves yesterday, and it seems that they have been accumulating reserves. $500 million is what they bought for the month. Do you think that perhaps this has some kind of something to do with intervention, given the fact that the rand has been in such good stead over the last few sessions?
Well, Eleni, I mean, there have been comments by senior Treasury officials as well as the Reserve Bank governor. It seems that people are quite concerned about the strength of the rand. So we weren't surprised to see the level of reserve accumulation that we did see. And of course, if we get an interest rate cut tomorrow, then that's going to reduce the cost, the opportunity cost of accumulating further reserves. So we think that we could continue to see this level of reserves being accumulated.
Well, and also just to do with a strong rand, the DG of the National Treasury said that South Africa should not be imposing taxes on portfolio inflows whilst it depended on these inflows to finance the current account deficit. Your view on this, because this really just points to perhaps a stronger rand down the line.
Yes, well, Eleni, I mean, what was interesting is that these were the first comments from the National Treasury on this issue. There's been a lot of debate about it, obviously, in the market about whether it's a good idea. And what the DG was reiterating is, in fact, one of the main counter-arguments to the imposition of this tax, that South Africa is, in fact, reliant on these inflows. And it would be sending a very contrarian message to the market to say that we don't want them any longer.
We've seen some risks coming to the fore to do with the banking sector in the European Union. We're seeing a little bit of risk aversion coming to the fore. So, in other words, this translating into the rand coming under slight pressure. But again, it does have to do with the MPC meeting that kicks off today. You mentioned that most are expecting an interest rate cut. Could you play us two scenarios for us? If we don't see a cut, what does that spell for the rand for the rest of the week? And if we do see a cut, could we see some weakness?
Well, Eleni, on balance, we maintain that a rand cut a rate cut will be negative for the rand. But I think that equally that markets have priced in a rate cut tomorrow. So if we don't see a rate cut, we would expect the rand to weaken on the back of that. But if we do see a rate cut, then looking forward, the diminishing yield could possibly also be negative for the rand.